Good evening, everyone. Time for another silver update. This is the 1 hour chart provided by netdania.com. You can click on the link below. Now, as I pointed out on my blog, you can see that in the night session, we had a smackdown that took us below this ascending trend line. Somewhat similar to the activity that we saw in the May smackdown, a very low volume attack during the Asian market. This one, if I just go by my hunches, my guess is this one isn't serious and is going to fail. One of the reasons I say that is because you can see how fast we're rallying back to this other trend line that I've drawn. The trend line I've drawn is based upon a relative trend line to the MACD. And the other thing I pointed out on my blog is that you can see the reset on the MACD actually is off the chart here. And this chart goes back to July or mid-July. So it's a reset in the MACD farther back than we've had anywhere in this rally. And we'll see how long-lived this is. This downtrend in the MACD, you can see it's going to take out the zero line if it continues on this pace. And so we'll see if they're serious. Now, if you remember the May smackdown, we had just a bunch of bizarre things happening. Bin Laden being killed, Obama posting his birth certificate, and a series of rapid margin hikes, all occurring at the same time. That's one among many reasons why I say that silver is the absolute key. I've said that for a long time. I know a lot of people don't believe me, but it is the Achilles heel of the powers that be. So we're going to watch this in the next couple of days and see if the powers that be are serious about this smackdown. If they are, they're going to have to follow through tonight with some serious selling. And we'll see if that's the case. Now let's get over to the questions of the night. There's really a lot to cover, so I'm going to try to do this fairly fast. First question is from Austin, and he says, "Hi, brother John F. As said so often, I'll repeat, thank you for all you do. Frequent mini sites, try to stay up to date and educate myself, and there are many things you talk about in the way you present it that cannot be found elsewhere. My question, what is the difference between QE and borrowed money, existing debt, along with leverage in general? All are money based on nothing and should be inflationary, I would think. If that is fundamentally true, is the current QE not a small pittance compared to the existing debt and massive leverage, all already in the system and therefore inconsequential in relative terms, in terms of immediate inflation?" Very good question. Now, I don't know the total numbers. You remember the $40 billion per month, that's just the MBS number. There's also existing Operation Twist purchases. There's other purchases in there as well, and other purchases hinted at. So what does that mean? Well, there's this concept of sterilization, and really what that term sterilization means is that the banks are going to get the money, but you aren't. So as Andy Hoffman has pointed out in his latest interview with SGT, the Fed is interested in propping up the banks, while at the same time the banks are raising their fees and they're charging exorbitant interest rates. Of course, this is all about recapitalizing the banks because, as I pointed out in my video, public enemy number one, that Bernanke is truly public enemy number one. He's not interested in you, and he's not interested in your family, and he's not interested in unemployment, even though he says so, or anything else that has to do with the real economy. He's interested in handing free money to the banks so that his banker buddies don't end up going to the gallows or facing a similar fate. So that's what it's about. It's about recapitalizing and bailing out the banks. And the inflation, if it can be sterilized, you have to remember, if you go back to the 1970s, I pointed this out a number of times, the wage and price controls introduced in the 1970s were introduced because the inflation wasn't going where they wanted it to go. And where they don't want it to go is to you. In other words, they don't want it to help out the little guy. They only want it to help out the big guy. The reason why they had to put wage and price controls in the 1970s is that it was actually going into wages. And that's really the only bad inflation as far as the Fed's concerned, because that's the little guy making money off of inflation as opposed to the banks. So we'll leave it there. Next question is silver mining costs explained. That's the latest Office series. Hi, Brother John. I came across this. Wanted to make sure you see it. It's a YouTube video. As a silver mine in Mexico, they're suggesting a $5.50 an ounce cost to mine silver as a primary silver mine. Don't know if this or another videos, but they're working on lowering that. In some of their other financial reports, they suggest similar. What do you think? So let's click on this YouTube, and this is from the CEO.
I'm Bradford Cook, Chairman and CEO of Endeavour Silver Corp. Today we released Endeavour's financial results for the fourth quarter and year ended December 31st, 2010. I'm pleased to report that the company once again set new records for earnings, for cash flow, and revenues last year. Specifically, Endeavour earned more than $7 million in 2010, or 11 cents per share, thanks to a 167% jump in our cash flow and a 70% rise in revenues. Notwithstanding our rising revenues, the company once again reduced its cash operating costs by 5% to $5.71 per ounce produced last year, or $4.72 per ounce in the fourth quarter alone. If our cash operating costs average $5.50 per ounce in 2011, and if the silver price remains above $31 per ounce, that implies that our operating profit margin will reach an astounding $25 per ounce this year. Now, given our production forecast of 4.7 million ounces of silver and equivalents in 2011, that means we could literally add $4.7 million to our bottom line for every $1 increase in the price of silver. Since Endeavour finished 2010 with more than $100 million in working capital, $88 million of which was cash, the company has never been in better shape financially, nor have we ever been in a better position to pursue major new acquisitions. With this year's expansion of the Guanajuato mines and plant now well underway, management remains focused on continuing our unbroken track record for organic growth at the two mining operations in Mexico, as well as seeking new opportunities to grow through accretive mergers and acquisitions. For more information on Endeavour and today's news release, please visit our website, www.edrsilver.com. Thanks.
Okay, so that sounds really bullish, and I decided to go ahead and do a comparison here. And the charts, this is a chart of Endeavour Silver, symbol EXK, and you can see it's overlaid with the SLV price. So you can see at the bottom, 2008 bottom, we had the EKX price down here around 85 cents, and now we're up here around $10, so tenfold return. Definitely outperforms silver. You can see that it's 150%, but that's back from the 2006 level. So I have to take him at his word. It appears that it's a profitable operation. Looks like it may go into new highs. And the question I would ask is that if it's, it's down 4.66% today, but the question I would ask is if it's so profitable to mine silver, then why isn't the market cap larger? And we can see that the market cap of this company is about $1 billion, and revenues are about 145 million. So it's just not that simple. I don't have anything against this company. I'm sure that they're doing the right thing, and they may be very profitable investment. But again, the key question is going to be, if they're so profitable, if there's so much money to be made in silver, why aren't they doing a lot more? Why aren't they leveraging this? And of course, the answer is going to be that it's not that easy to start up a silver mine. It's not that easy to meet all the regulatory requirements. It's not that easy to face the confiscation risk and all the other things that are involved turning up a mine. So they've outperformed silver, but we'll see if that is the case going forward. And last question. And that is follow-up to your recent video from Ghost Wolf. Hello, Brother John F. Thank you for your efforts. Both the information and the style in which is presented is much appreciated. If I may impose on your good nature with a question, I note you have recently changed your views on acquiring some assets now by going into debt with the intent of paying the debt back with worthless money. You cited evidence the government banking conglomerate is going to print money to buy mortgages, adjust the payment terms to account for dollar depreciation, and further use debtors' prisons to threaten the newly minted deadbeats who find it difficult to adjust the new payment terms. I would agree with you regarding going into debt to acquire additional property and counting on money depreciation to render the debt manageable. What is your thoughts on the average homeowner who is still paying their mortgage? Do you think they would be better off selling their home to get out of that debt? Obviously, some would have to take a loss to do so in the current housing market. Also, they would then just have to rent, and rent will just pass on whatever increasing costs the owner has. Best regards, Ghost Wolf. That's a difficult question. Again, I don't give investment advice, but I'll just give you general advice that I found in my lifetime. Every time I've even thought about being involved with the government, whether that's taking money from the government, even if these are legitimate programs I paid into and legitimate claims that I could make against them, I've always thought better of that. I would much rather have no involvement with the government whatsoever except to be the taxpayer. Yes, that can be a painful thing, and yes, it can build up a lot of resentment, but I think that it's much better to be a person that the government relies upon for revenues than to be a person who's dependent upon the government. I don't want to have a mortgage from the government. I don't want to have a paycheck from the government. And I don't want to have any of my livelihood dependent upon the government, because ultimately I think that all of those in that type of situation are going to have their livelihood inflated away or just simply cut off. And so I don't want to be in that position. And for that reason, I would suggest that whatever anyone does, they would not want to find themselves in a position of being a partner or a debtor or a payer or in any way involved with a government agency. It's probably going to work out for the worst in the end. And that brings us to the main topic of the night, and that's going to be silver substitutes. The reason I wanted to address this, I've talked about the fundamentals in my fundamentals video, and I just wanted to get back to some of the fundamentals here. We're having a little smackdown. People tend to doubt the reality of what they're investing in here. So I wanted to do an overview of silver, and just let's get a brief overview so you can understand the properties, and then we'll look at the substitutes. So this is from Wikipedia. This is just the general article on silver, and we'll go down to the breakdown on the characteristics so we'll understand the key properties that silver has. Silver is a very ductile metal. That means its ability to be drawn into long wires. Gold is more ductile, but silver is very high on that. Malleability, of course, is the same thing. A little bit harder than gold. Monovalent coinage metal with a brilliant white metallic luster that can take a high degree of polish. It has the highest electrical conductivity of all metals, even higher than copper. So that's going to be number one. Number one is going to be the electrical conductivity of silver. It's the number one metal, and there are no substitutes in that regard. We're going to see that in a bit here. Among metals, pure silver has the highest thermal conductivity. So it's also number one in thermal conductivity. Now, a lot of people may not consider that important. I think that that may be more important in the future going forward. I don't have time to get into that. The third property of silver, well, we talk about contact resistance. That's going to get into the electrical conductivity, but the other important aspect of silver is its reflectivity, and that is second only to aluminum, and that's only in certain ways. We'll go up to the top and look at that here. Now that has to do with its use in photovoltaics and photographic film. I don't have that link here, but so it's going to be the top three. Now, the one I'm not going to cover here is the antibiotic use. You know that just from common knowledge, because the term born with a silver spoon in your mouth, of course, it's not born with a gold spoon. And the reason why is because silver has that very, very high antimicrobial property. So the rich, even though they have enough money, the very, very rich have enough money to have gold goblets and gold utensils, they don't use those. They use silver. That's, of course, because of its antimicrobial properties. So silver has number one in three categories and potentially number one in another. So let's look at the situation for substitution. This is a PDF from the Silver Institute. I'll link this and read a little bit of this. Looking back over the past 20 years, silver used in industrial applications has principally been affected by trends in industrial production and economic growth rather than by movements in silver prices. In the main, the lack of price elasticity has been due to the limited availability of substitute materials that have existed. In other words, there's nothing like silver, particularly in electrical and electronics, which accounts for the bulk of silver's use in this field. In spite of the lack of substitutes, thrifting has been a constant feature of silver industrial demand over the past 2 or 3 decades. In particular, the trend towards increasingly small consumer electronics has driven down the size of electrical components, which in turn has seen an associated fall in the use of silver in this circuitry. Another key factor underlying the success of silver is industrial demand has been growing by a myriad of uses in which the metal has been employed, ranging from ethylene oxide industry and photovoltaics to a whole host of consumer electronic products, the demand for which is indelibly linked to the performance of the global economy. In contrast to gold, silver fabrication is increasingly dominated by its industrial element. Industrial demand accounted for less than 40% of total fabrication in the early 90s. This grew to 52% in 2008 with the sharp rise in sales of household consumer appliances, whether basic white goods, fridges and washing machines, for example, or household electronic devices such as plasma displays used in flat-screen televisions, largely responsible for the increase, with a rapid growth in developing world consumption integral to this outcome. The fall in consumer spending due to the financial crisis led to industrial demand in 2009 falling back to account for 41% of total fabrication. However, the robust recovery, do you remember a robust recovery? I don't. Well, there's been a robust recovery in silver use witnessed in 2010 suggests this decline was a temporary aberration, with the previous upward trajectory expected to be restored over time. And of course, with the billions in Asia, there's no question that's going to happen. Next article, this is from Financial Sense Archive. This is on the same issue about the silver substitution. At the same time, mining capacity has been constrained. Global demand has been exploding. Asian economies as a whole are growing at a rate roughly 3 times that of the U.S. One important aspect of this growth is that highways, seaports, power stations, and waterworks projects are underway are the very kinds of infrastructure developments that pave the way for sustained economic growth. The parallel between the U.S. consuming more than half the world's commodities in the 1950s and China doing something similar today suggests that the demand being generated now may be far more sustainable than those predicting a post-Olympics bust imagine. Against this promising backdrop for commodity prices in general, silver assumes a rather unusual position and appears to be set to continue to outperform in the years ahead. Silver is arguably the most versatile of metals, as is witnessed by more patents being filed for new uses of silver each year than for all other metals combined. has the highest electrical and thermal conductivity of any metal, the highest optical reflectivity, the lowest contact resistance. Silver is classified as a precious metal, but is the only one with chemical reactivity to act as a catalyst in several critical applications. Ironically, despite the precious classification, the vast majority of the metal's uses today are industrial in nature. So that gives you an idea, and the substitutes, you can do the research yourself. The substitutes just simply don't exist. There's been some talk about the graphene properties. I haven't seen any results in that. So again, to re-emphasize the fundamentals, silver is the most electrical conductive. It is the most thermally conductive. It is rivaling the highest optical reflectivity, and it is one of the only metals out there that has those anti-biocide properties. So there's no question that silver is, in my mind at least, the key metal going forward for industrial growth and future growth in the Asian economies. And of course, in my opinion, it's also the most undervalued asset of all time, which means that it has the potential for the largest growth as an investment metal as well. And so all those things added together, the lack of substitution and all the properties that silver has, I think that anybody who examines it's going to see that the price potential explosion with inelasticity of both supply and demand indicates that as far as the fundamentals go, silver is the best fundamental play for the next decade running, and I don't think triple digits are very far away. And we'll talk to you next time.